This is Weights and Wealth, your one-stop shop for entertaining education on building a stronger body and bank account.
We are not doctors or financial advisors and must warn you this is not medical or investing advice. It is for your entertainment.
Welcome back to episode 34. Today we will be talking about Weights and Wealth's take on the economy. But first, Nick, our shout out.
Yes, sir.
We always do a shout out at the beginning of every episode. And if you want to be included in that shout out, just share the show. That is, of course, except for the one time where Nick shouted out himself since we hadn't had anyone share it that week.
I did. We were missing one shout out for these episodes. So I wrote a review myself so I could shout myself out. But we have been getting a lot more shares recently from listeners. So that's always exciting.
Yeah, good job to our listeners for helping support us. Our shout out today goes to Chris and Saeed from the Higher Standard podcast. They're really supportive of our show and are always giving us advice. So we wanted to thank them. And we get a lot of our information on the banking sector especially, but also the economy from them. So shout out to Chris and Saeed.
Yeah, it's like really cool because they're very busy guys and they take the time to answer some of our questions, which is really nice of them. So now we'll do the wealth wisdom of the week, and this is to stay up to date on current events. And one way to do so is to listen to Weights and Wealth, because we always have an intro article and then a talk, and they're usually about current events. First of all, it's great to talk about at work, an interview, something like that. But once you really start getting into like economics and finance, you may see something that nobody else sees, and you could take that and try to capitalize on it.
Absolutely. Yeah. I mean, if you don't really know what's going on, you may make a poor decision with your stocks or with buying a house if you're not really up to date on what the market is doing. And that's not to say that staying up to date on what's happening is going to help you make predictions correctly, but at least you can avoid some impending disaster.
Yeah. And then our intro article today is actually a TikTok. This aired on Fox, and it was this girl who compared Mean Girls to what's happening with the US dollar right now. And I didn't really get it at first because I haven't seen Mean Girls, but once my sisters explained it to me, it made a lot more sense. And this girl in 30 seconds perfectly explained what's happening with the US dollar as the reserve currency right now, while we have people on CNN and Fox that take, minutes, and it's something that's hard to understand for a lot of people.
Are you able to summarize the TikTok for us?
I don't. It had something to do with like everybody's friends with this person, but then there's this like outsider, and then people start siding with the outsider or something like that.
Yeah.
I haven't seen Mean Girls. So
right now, previously everybody wanted to be friends with the U.S., the popular girl. But now that there's a new girl in town, China, people are starting to go towards using the Chinese yuan instead of the dollar. You're seeing that in the Middle East with oil, right? So that's the new girl that people are kind of turning their head and looking. It's that meme where the guy's walking with the girl and he's holding the hand and then he's like turning around.
Yes.
You know what meme I'm talking about?
Exactly. Yeah. Okay. Yep.
So you're seeing like China and some of the Middle Eastern countries and Brazil start to try to get away from the dollar.
Yeah. Yeah. So, then we have the talk. If you want to do that quick.
We just wanted to remind everybody that Epstein didn't kill himself, and we still haven't seen anything about his list. So, just wanted to remind you guys.
Okay. Now we'll get into what we're thinking kind of about the general economy, and we'll start with how we got here. So I think what started a lot of this was COVID and the printing of money and the handing out of money, which, I mean, shocker, we have high inflation now. Like if you just increase the money supply, there's going to be inflation.
And a lot of people want to blame Biden for this right now. You can definitely blame Biden, but you also have to blame Trump. He started the printing of money during COVID. Whether or not he was in a tough position, like he did start the printing of money for the stimulus. So blame falls on him too.
Yeah, so there's the stimulus checks and then the PPP loans as well, which weren't really loans. And overall, PPP loans paid out more than the stimulus checks did. I don't know exactly how much, but most Americans got like 2-something grand in the form of stimulus checks, and PPP loans exceeded that. Once you consider tax benefits.
There's also a lot of fraud for PPP checks.
There was, yes.
Did you hear about the guy with the planes?
No.
He started an airline when he found out about the PPP loans and just bought like maybe like 7 or 8 broken airplanes and then claimed that he had like this airline business. So then they stopped the airlines from going under with the PPP loans and other loans, I think.
Yeah.
And he was getting like hundreds of millions of dollars for his airline that he started.
Yeah, because the airlines had extra benefits than just your regular old PPP. They just got money, like just straight up money.
Because no one was
to
flying
prop them up. Yeah, which personally, I think they should have let the free market run its course. You know, let these things go under. People can buy up these new planes, and then we could have new airlines.
Yeah, and then maybe we'd have an airline where we actually get decent food and not like those little, I don't even know what they are. The snacks they give you. It's just like this thin conglomerate of soy and vegetable oil.
Yes. If I'm really hungry, I'll take one, but the ingredients list on the back just makes me cringe. But yeah, I think it would have been a great time for innovation, but the federal government picked the winners and didn't let any new players in.
Yeah.
So there was all that handing out of the money, and then also the sanctions on Russia when they invaded Ukraine, because they couldn't conduct business in US dollars anymore, which is why I think that we're now at the point that the US might not have the reserve currency. And I know we locked them out, like any Russian aristocrat, or I think really any citizen, couldn't access their money from a U.S. bank. Is that right?
Yeah, or the payment system. I forget what it was called.
I think PayPal. I think they couldn't use PayPal anymore either.
They all probably grouped together, just like they did against Tate. But the consequences of that is that we pushed Russia and China closer together. And generally, you don't want to push your enemies into a team with each other, but that's what we did. So
yeah, and I'm not sure if we'll talk about this on this episode, but yes, we will, about like centralized crypto and how easily they just got shut out from being able to transact anything.
Do you want to head there now, or do you want to continue where we are right now?
Sure. Yeah. Oh yeah. Because this one's just about the Fed launching its own crypto. And shout out Sean Doyle. I took this from one of his Instagram stories, memes. It's so Ted will link the graphic, but it basically just shows a person looking at convenience, like laser vision, and then there's all this other stuff like frozen funds, centralization, social credit scores, zero privacy, cybersecurity attacks, zero anonymity, stuff like that a lot of people don't see with crypto. And crypto really isn't as anonymous as people think it is.
Yeah, it's the entire blockchain is traceable. So
yeah, and it's not that hard to figure out who is a specific user ID.
That's one of the perks of the blockchain. Like that's why some states are looking at using the blockchain to track titles on like your car and stuff, as you can see who had it at what point. And so people think that crypto is anonymous because the blockchain, it's like, no, it can be traced very easily.
Yeah.
You can see the whole history of it.
Yeah. I know auditing might eventually move to a blockchain. It would be so much easier to audit a company, and the margin of error would also get a lot lower than the processes that they have now.
So I think FedNow with this whole, the digital crypto is not FedNow. FedNow is something different, but FedNow is basically, you could think of it as like Venmo for the federal government, and they want businesses and people to use it. So the first launching of that goes live, I think June 1st. May have written it down, but anyways, it's supposed to go live this summer, and That way the government will be able to track all your expenses to and from other people.
Is that just within the government, or is that supposed to be for everybody?
It's supposed to be for businesses and people too. So the thing with that is now we're moving towards a completely digital currency, because for the past while we've had kind of like a pseudo digital currency with everyone having all their money online in bank accounts and using credit cards. But with this FedNow, they would probably try to end cash. You can see they've been trying to phase cash out since COVID, right? And I think that is not a good idea, because people being able to use cash, the government obviously doesn't like that, because they want to be able to tax every single cent that moves in this country. But when you look at the people that are either like really young people getting their first couple of jobs that are doing stuff for cash, or people in really low income and impoverished areas that might not have a like full W-2 job that do things for cash, you're hurting those people. So you're hurting the people at the very bottom of the income bracket. And like it seems like whenever the government does something to help people, they're always hurting the people at the bottom.
Yeah, it's because first of all, large companies, they very, very rarely commit fraud like that on purpose, like hiding cash that they receive in the for like revenue. Like they aren't hiding that, because why would they risk their entire business to not be taxed on a few $1,000s of income?
Yeah.
And it is the lower end of the income spectrum that ends up getting hurt the most.
Yeah.
So yeah, this would definitely hurt our freedom F for sure.
Yep. Rip to one of the 5 Fs with FedNow.
Yeah. And also another problem with that is like the privacy issue, for me at least, because if everything's on the blockchain, you know what, like the government will know what you're buying. Like right now, even though most of it's online, you don't report like exactly what you're buying. You put it into like general categories, but if it's on the blockchain, they will know exactly what store you purchased it from, what you purchased, and so on.
Yeah, if you thought the Patriot Act was bad, this is much more of an encroachment of privacy.
Yes. Anything more for crypto from you, Ted?
That's all I've got for crypto. You want to hit gold and silver, or you want to hit real estate or AI?
We can do gold and silver.
All right. We talked about before. Do you remember what episode it was? We'll link it right here if you're watching. But in one episode, we went over Ray Dalio's book, The Changing World Order, and how whenever the reserve currency changes, gold spikes in value. Happened after the Dutch Empire fell and after the British Empire fell with the pound sterling. So whenever the current reserve currency kind of falls off and a new one replaces it, in that replacement period, the value of gold skyrockets and then comes right back down. So when a lot of people invest in gold and hold gold, they're holding gold or silver for when it eventually spikes up.
Yeah. And we're not recommending that you purchase it because we're not investment advisors, but this is not part of that 10% for me that would just be like play around money. And this is also one of those things that was the wealth wisdom of the week, where if you have an understanding of current events and you look at history, you might be able to capitalize off of it.
Yep.
So at least me personally, I don't have any gold or silver right now, but I do kind of want to buy some just in case it does skyrocket and I can make a few quick bucks off of it.
Yeah. To buy the house, I had to liquidate some of my investment funds. So now gold and silver is a little more. I'd like to have it as like 5% of my portfolio. Right now it's a little bit more than that because I got rid of some other investments, but kept the gold and silver. Because one of the things I also like about gold and silver that I think people never really comment on when they're talking about metals is if you have like a brokerage account and you have stocks in it and you need money, you can just liquidate those pretty quickly, right? You can get that money within the next day or two. But with gold and silver, if you have it physically, a lot of people will say this is like a drawback, like it's not liquid, right? That's for many people actually a positive, because many people might spend their savings or their investments when they shouldn't. And if you have actual physical metals, it can stop you from doing that. So it's basically protecting you from yourself.
From day trading.
If you're bad at like keeping your investments and not drawing out of that. So if you do struggle with like taking money out of your investment accounts, maybe putting a little bit into gold and silver so that it's a much bigger barrier to trading, that would be good for you. Kind of like how we talk about food. If you really struggle with eating like some processed foods like chips or cookies, just don't buy it at the grocery store so it's not in your cabinet. Make it so that you have the barrier of having to go out and get it at night if you want it.
That's exactly what I was just going to say, is like setting up these internal controls for yourself, so you only have to make a choice once and you don't have to make it over and over and over. That's really beneficial. I mean, that's how I do my food shopping too. So who's the big gold guy? Is that Peter Schiff?
Yeah,
do
Peter
I have
Schiff.
that right? Okay, so I came up with this myself. The Chris and Saeed also said it on the Higher Standard, so I'm not plagiarizing, but they said a lot of people say it.
Yeah.
Is that a broken clock is right twice a day. So he could be right on this one.
So Peter Schiff is one of the guys that's always hyping up gold like for the past 15, 20 years. And so like it's the people that are basically like crying wolf and the sky is falling. If you always say that a crash is going to happen, then when a crash happens, you were right. But the rest of the time that you were saying it, you're wrong.
Yeah, you are also wrong most of the time. And also the return on gold and silver, it holds its value well. I think it exceeds inflation by a little bit, or maybe by a little more than a little bit.
It depends on like what time span you look at.
But it overall, it's definitely under the stock market.
Yeah, I would say it's better than holding cash.
Oh yeah, definitely.
Unless you want that cash to immediately be able to buy with an opportunity. So it kind of depends on your investment strategy. But again, that's why like for me, it's 5% of my portfolio. At least that's like the goal, so that it's there and I won't get rid of it and I have it if it does spike up. But it's not like my entire investment strategy is having gold and silver.
Yeah. And also I've always kind of wondered why gold was like the what do you mean? Like the gold standard. It kind of backed the dollar. I never really understood that because it doesn't really have much use
It's not like copper.
Right. Yeah. That's what I've always kind of wondered.
Yeah.
But that's what it's been. So I guess we'll go on to stocks now.
All right.
Stay on the investing trend. So I have written stocks only go up except for when they don't, because sometimes they don't. And recently they haven't been doing too well. And part of this is because the Fed has been raising interest rates, which has raised bond rates, CD rates, high yield saving account rates. And when you're an investment advisor, one key metric is the risk adjusted return on an investment, and that's kind of measured by what's called the beta. And so the S&P, the beta of that is 1, and if it's lower than 1, it's less risky. If it's above 1, it's more risky.
Okay.
So like an individual stock will usually be above 1.
Yeah.
Some blue chip stocks like AT&T might be under 1. I don't know that for sure, but that is really important to look at. And like that, I don't know for certain, but it might be just as important as the actual return on investment.
Okay.
And that's basically how well you're managing money based on the risk, because everybody has a different risk profile.
Yeah.
So now that, bonds, CDs, their beta is much less than 1. Now that they're returning closer to what the stock market normally returns, they have gone up in value and stocks have gone down. Which that is one factor in why the stock market has been down a little bit.
Yeah. Also, with the increase in interest rates, they've been trying to draw liquidity out of the market, right? So
yes,
with that, people have less money laying around to throw at stocks for the future.
Yeah. So this is just from like a pure supply and demand perspective. That is one reason why stocks, I think, have gone down. That was all I really had on stocks. Did you want to?
Yeah, I think also like we've technically been in a recession since not this past January, but the January before, right? And then the White House arbitrarily decided to change the definition of a recession. But we've technically been in a recession for a while, and like for the past 6 months, if you look at like Bloomberg or any other like economic watching site, they've all been kind of predicting a recession coming up, meaning like they think it's going to get worse. So a lot of people have been for a while just deciding to pull out of the market because they think it's going to keep getting worse over the next couple of years.
Yeah, and Ted and I have thrown around the idea of doing like short lessons on YouTube or something like that. And one that I had the idea for is leading and lagging indicators of a recession. So a leading indicator would be that a recession is coming up, and there are a bunch of different factors in that. And then a lagging is telling you that you were in one, which is how people define like the years that a recession happened.
Yep.
So if that's something you guys want me to do, please let me know, because if there's not much interest, I won't do it, but it would still be fun.
Yeah.
Okay. And then we'll have the real estate market. And I just wrote, your guess is as good as mine, because I don't really know. And Ted bought a house right before May 1st.
Yep. Got in before that deadline. So my elite credit score would have negatively impacted me. We talked about that in a former episode. I'll link that right here if you're watching. But yeah, interest rates are still going up right now. So I was able to lock in around 5%.
Which is historically under average, like below average.
Historically is good, but compared to most people right now is not as good. But at the end of the day, a house, in my opinion, is a utility. I don't think it's like a liability or an asset if you're living in it as your primary residence. I think it's a utility, like you need somewhere to live. So Alex and I decided we needed a house and we wanted to buy instead of rent. So at the end of the day, it didn't really matter what the interest rates were. We were going to buy a house. We just had to find the right one. So
yeah, and I think if interest rates do continue to go up, we'll definitely see real estate values go down, because I didn't realize this till I looked into it, how much an interest rate affects a mortgage payment.
Yes.
Even just 1%, it shoots your monthly payment up.
It's like exponential.
So I can't even imagine what they were like in the 70s when they were up like upper teens.
Yeah, 19% mortgage rate.
Yeah. It's crazy. But that being said, most of the time, the best time to buy real estate was 5 years ago. So I don't know if you would have made money between 2003 and 2008. You might have ended up a little under or like around even, but it's a pretty safe bet that real estate will appreciate.
Yeah, over time.
Yeah.
All right. I think we've got AI next. What do you got for AI?
So I recently read an article that I also sent to Ted that AI passed the bar exam. It passed Ward and MBA, but it failed Accounting 101. So
looks
that
like
made
your
me
job
feel
is
pretty
safe
good.
for now, Nick.
Yes. I mean, I did read it on accounting today. But yeah, it makes you feel a little safer, because what I was reading about AI is it's more of a language model than a numbers model, which I didn't know. And I would think it'd be better with numbers.
Yeah.
It did do better in information systems and auditing, but better than the humans. But tax, it was worse. Financial reporting, it was worse. And I'm in tax, so I feel pretty safe right now. But it got like a 47, I think, % on an intro to accounting class.
Not great.
Yeah, and I don't know if that's because there's just constant tax law changes, or there is some what do you call it, professional like view kind of about a transaction, because it's not always like set in stone, like you do this with this. There's gray areas sometimes in tax law because it doesn't cover it like word for word. Like your situation might apply to a couple different laws.
It's written somewhat subjectively for some cases.
Yes.
I guess.
Yeah, because it would be way too much to come up with every single transaction type. So there is some leeway there. And then also with new AI, I know we talked about this with the Luddites. There is some of that where people don't want it to come, but it could benefit us a lot in the future.
Yeah, everyone thinks that it's going to get rid of all these jobs and then there aren't going to be any jobs left for people. But whether it's the printing press or the sewing machine or the internet, over time, it just creates more opportunities. And even though it takes away some jobs that people had been doing before that technology, it opens us up to innovation and creates new fields and new jobs. So I don't know, AI could break that trend, but throughout history, that is what's happened.
Yeah. And with what I'm about to say, I'm just going to preface it by, I would not want to live in this world at all. But I wonder if we'll ever get to a time where socialism actually makes sense, where like robots are doing, they can do literally everything from grocery shopping to building things to really anything. That would suck. I would hate that.
I think anxiety and depression would be even worse in a dystopian future like
where
that.
People don't have to work.
Yeah, because people need purpose. They need something to do. Like they need something to achieve. Mm-hmm. So
yeah, but it makes me wonder with how fast technology increases. Like there's that the size of the memory chip or something like that. Oh
yes, yeah. So with like computer chips, there's like an exponential curve as far as they get smaller and the amount of information they can store on them increases. So
yeah, and this may have been like apparent in what I was saying, but if people don't need to work, like figuring out who gets what, we wouldn't have who like works the hardest or comes up with the best innovation if everything is there. That's also assuming medicine's perfect and a lot of these other things, which I don't think we're anywhere near there right now, but it could be something in 1,000 years.
Another thing with AI, if we want to hit back on the investing train of thought, is a lot of people are trying to invest in AI right now. And it's a lot like the .com bubble, where everyone's just throwing money at all these different companies just because they say AI in them. Just like before, if it was a .com, if you owned a website, didn't matter if there was even a business model behind it, people would give you money to invest in it. And then the vast, vast majority of those investors and those companies wound up being losers, right? So I think we'll probably see the same thing with AI. A lot of these companies are going to crash and burn and there'll be nothing from them. And you can't really predict the next Amazon, right? Like Amazon came out of that .com era and it's an absolute juggernaut, but it's like impossible to predict which AI company is going to be the next Amazon. So I don't know. Are there any like AI ETFs that just bunch them all in together that you can invest in?
I know Kathy Wood has the ARK.
Yes, the ARK fund.
Yes, they've done horrible recently because they're all tech sector.
Yeah.
So they've done pretty bad.
There was like a 2-year span where she was beating Warren Buffett.
Yes.
And she thought she was amazing. And then everything just crashed.
Yeah.
And Warren Buffett comes out on top.
Yep. As he always does. So yeah, I'm sure one of those are centered around AI. But on the Amazon topic, I saw this thing the other day where it was like, if you had bought Amazon stock in 1999 for $100 a share, you probably would have sold it when it crashed in 2000 whatever for $3. Yeah.
Everyone thinks that if they had invested early on in a company like that, they would be rich. And most people, once a stock starts to drop, they sell. They know it's buy low, sell high. But I mean, you the other day were telling me you were thinking of selling some stock.
Yeah.
And
I mean, I sold a decent amount at a loss, but that kind of gets into the sunk cost fallacy, where if you don't want to sell something just because you lost money on it while it could continue to tumble.
Yeah.
So
it's basically gambling.
Yeah. But the odds are in your favor, which, yeah.
It's gambling, but instead of the house winning, the market wins.
Yep.
So.
All right. Do we have anything else?
It's all I've got.
Yeah, I think that's all I have too.
All right, guys. We'll see you in a couple of days. Thanks for listening.
Thanks for joining us today at Weights and Wealth. And don't forget to apply today's lessons to live healthy and wealthy.
If this conversation will contribute to your fitness and financial gains, please share it with a friend or family member and give a 5-star review so more people can lift bigger weights and get bigger bank accounts.